You probably heard it before, either on the news or watching The Wolf of Wall Street. The stock exchange. What is it? To put it simply, the stock exchange is nothing more than a giant global network where every day huge sums of money are moved back and forth on a worldwide scale, gaining or losing value. For example, in 2019, the global stock market gained more than $17 trillion in value, according to Deutsche Bank. However, it's not apples, oranges, or used cars that are traded in this marketplace, but mainly securities. Securities are rights to assets, mostly in the form of shares. And the share stands for a share of a company. But wait, why are shares traded at all? Well, let's backtrack a bit. There are two reasons why shares are traded: raise money and reward investors. Companies need money to pay their employees, suppliers, run their operations, and keep growing overall. When a company needs to raise cash, it enters the public market by doing an initial public offering, IPO, in which a company sells a defined number of shares in the public market, letting everyone, as you and me, get a piece of the business. Other times, the company has been around for a while and doesn't really need more cash. But the company wants to reward its early investors and employees with stock options. In that case, they do a direct listing. In a direct listing, shares aren't sold from the company to public investors, and the company does not receive directly any cash. Instead, it just allows the resale of shares held by company insiders such as employees, executives, and early investors. This form is of course much less popular, as companies always aim to raise money whenever they can. But quite major companies like Slack and Spotify have done it. Okay, now, let's get back to the share. Why do they have a price? Well, for the value of the share, it is supposed to simply reflect a piece of the value of the company. Think of the company as a pizza. The bigger the pizza, the bigger each slice. If, for example, Amazon is able to increase its profits with new business ventures, Amazon will get bigger. So in our example, the pizza will become bigger, and so the slice, and therefore the value of the share. But what is Amazon gaining from it? Well, from gaining value, not much directly. After all, the main gains for any company entering the stock exchange are raising money through the IPO and rewarding investors and executives with valuable shares that they can profit off. Now for the trading of shares, even though it seems to be a complicated science or crazy art, but it's frequently just a game of chance. No one can say which company will perform well and which will not. Usually, if a company has a good reputation and narrative, investors will back it. A company with a poor reputation or performance will have a difficult time selling its shares. Unlike a normal market where you can touch the apple before getting it home, on the stock exchange, securities are available in the form of virtual goods. They appear as share prices in monitors and within your broker's app, and such share prices can rise and fall within seconds. Shareholders, therefore, have to act quickly in order to not miss an opportunity. Just a rumor can make the demand for a specific share rise fast, causing the share price to spike regardless of the real value of the company. Of course, the opposite is also possible. If a particularly large number of people buy weak shares, because if they see, for example, great potential behind an idea, their value will rise as a result. More often, young companies can benefit from this. Even though their sales might be falling, they can generate cash by placing their shares in the stock market. In the best scenario, This will result in their idea being turned into reality. In the worst scenario, this will result in a speculative bubble with nothing more than hot air. And as the usual case with all bubbles, they all end up bursting. Keep in mind, there is a stock exchange in almost all countries, all of them globally interconnected, which makes the stock exchange a global marketplace available for everyone, to give each of us a chance to invest in our future.